Hello traders, the title of this video is Elliott Wave Trader gives a clear explanation of the short, medium and long-term trends. Let's get started. I have been asked by traders many times saying to me, George, please, when are you recording that videos about short-term, medium and long-term trend? There was a particular trader that was asking me that question all the time. I haven't forgotten you, and I would like to say to you, thank you very much for reminding me at the last time. So I have no more choice but to reveal to traders, the connection, the correlation between short-term, medium, and long-term trend. This is the first video, so do not think that everything I'm going to say here is all finished. I will be recording more video in this for this series of video, and we will be talking about short-term, medium, and long-term trend. So after watching this video, don't think that you know everything, about short-term, medium, and long-term trend. But at the end of this tutorial, one thing for sure, you will have at least 70% understanding about short-term, medium, and long-term trend. Then we will record another series of video where we will be talking about practical use of the theory. So what we are talking about today is a bit about theory. So let's get started before you run away. All right, the first thing that we need to understand, because we are talking about Elliott wave, we want to know what is an Elliott wave cycle. The Elliott wave cycle is formed of the trending phase and the corrective phase. No Elliott wave trader or practitioner or analyst will deny that. The Elliott wave cycle is formed of 5 waves, 1, 2, 3, 4, 5, as you can see here, 1, 2, 3, 4, 5, followed by a correction. All right, so with that observation, we can say that a trend derives from a cycle. A trend derives from a cycle. But we are talking about short-term, medium, and long-term trend. So we know what is a cycle, and especially the Elliott wave cycle. Now we know that a trend will derive from a cycle. So you want to note it down. That's very important for us to understand that a trend will derive from a cycle. All right. When we are talking about short-term trend, is relative to the market participant. So what do I mean by that? So for a day trader, all right, what is the short-term trend for a day trader? So that's what I meant by a short-term trend is relative to the market participant. A medium-term trend is relative to the market participant. A long-term trend is relative to the financial market trader. So if you talk to a day trader, what is the long-term trend for a day trader? If you talk to a swing trader, what is a typical long-term trend for a swing trader? If you talk to a position trader, what is the long-term trend for a position trader? If you talk to an investor, what is the long-term trend for that investor? So when we are talking about short-term, medium, and long-term trend, is also relative to the person that is trading the financial market. Very important. So for instance, for a day trader, personally I would say for a day trader, because we do not have the whole day, the long-term trend for a day trader is the daily chart. You may see that, all right, daily chart. So you got the whole day to trade and close those trades at the end of the session. If I got 3 or 4 hours, that's it. So for a day trader, we may say that a day trader is a long day, 24 hours. So for that day trader, it's the daily chart, the long-term trend. We may say that, I'm going to come to the short term and also the medium term for a day trader. So for a day trader, with the daily chart, long-term trend, we may say the hourly time frame will be the medium-term trend for a day trader. All right, we may say the 3-minute time frame is the short-term trend for a day trader. Now, those are my own observations, so feel free to criticize me in the comment section. But before you criticize me, please watch the full length for this video. And if you're going to criticize, make a constructive, okay, criticism. All right, I would prefer that. Okay, we want to keep it, okay, clean. Okay. So what is for a swing trader? So we say that short-term, medium, and long-term trend, okay, are relative to the market participant. All right? That's what I'm trying to explain here. So for a swing trader, the long-term trend for a swing trader may be a monthly chart. This is my observation again. Monthly chart, long-term trend for a swing trader. What is the medium term for a swing trader is the daily chart. All right, and for a swing trader, what is the short-term trend? All right, for the short-term trend is the hourly time frame. All right, so what is the long-term trend for? So you see now, so what we are talking about different type of market participant, and they may say, if you say to a swing trader that the short-term trend is 3-minute time frame, he will be looking at you a bit funny. All right. All right. So if you say to a position trader that the short-term trend for a position trader is the 3-minute time frame, he or she may look at you like you are coming from the moon. All right. So for a position trader, so most position trader keep position for the whole year. So the whole position, okay, because of the fundamental for the whole year. So we may say for typical swing trader, all right, another swing trader, correction, typical position trader may consider the yearly chart as, okay, a long-term trend. But not all swing trader will consider, again, one more time, not all, okay? So for each individual market participant, he or she will determine what he or she is calling short-term, medium, okay, and long-term trend. But you do not want to forget that the trend, okay, when we come together, the market stable data stated that, okay, the trend derives from a cycle. Now we are also, though we can label different, we may call this short-term, medium, long-term trend, but the trend will always derive from a cycle. So this is a bit of theory. So for position trader, he or she may say yearly chart, typical, okay, position trader, yearly chart is my, okay, long-term trend, all right, monthly chart is my medium-term trend, and daily chart is my short-term trend. Now you see now the difference between, okay, the short-term, medium, and long-term trend. But I haven't finished it because I have so much information here. So if you watch this video, okay, halfway, you do not understand anything, all right? So watch the full length for this video because I prepare it carefully, all right? Okay, so we cover it now. So short-term, medium, and long-term trend are relative to each market participant. A trend derived from a cycle, okay? The next thing that we want to understand is that the short-term trend will form the medium-term trend. The short-term trend form the medium-term trend, and the medium-term trend form the long-term trend. The long-term trends. All right, so I will show you on this chart now one thing you need to understand. So there's one more thing I want to say here. Okay, so now we are looking at the Elliott wave cycle. Here we have the trending phase. So to explain to an Elliott wave trader, so you see, you call a daily chart your, okay, your long-term trend for a day trader. So the hourly time frame is your medium-term trend. So this is very, very, very important because you are an Elliott wave trader. You want to understand that a trend is often formed of 5 waves that are not overlapping, that are following, that are, okay, are not, okay, violating the Elliott wave principle. So you may be an expert about market cycle, short-term, medium, and long-term trend, but if you are not an Elliott wave trader, you may not understand what we are talking about here, because this is an edge that we got. All right. So for an Elliott wave trader, the trend is always formed of what? 5 waves. And those 5 waves can be also subdivided into, okay, mono waves. And the corrective wave very often will be formed of 3 waves. So you want to understand. So for somebody who is a day trader, now you see, okay, you say, all right, George, I get the message. The trending phase is now in place. I can see that the price is in the rising channel, no overlapping, all right, on my daily chart. That's my long-term trend. Good. Now, what are my medium-term trend? Your medium-term trend, my friend, is this. Those waves you see here, 1, 2, 3, 4, 5. Why? Because the medium-term trend form what? The long-term trend. So if you are for an Elliott wave trader, we say that as a day trader, we say our long-term trend is what? The daily chart. But we know that also because we are Elliott wave trader, the trending phase is always divided into 5 waves. So what are our medium-term trend? Our medium-term trend are the 5 Elliott waves. All right. So medium-term trend form the long-term trend. But when we are talking about medium, short-term, long-term, is relative to each financial instrument. But we are all united when we say that a trend always derives from a cycle. So are you getting it now? So for a day trader, the long-term trend is the daily chart. The medium-term trend, which are the 5 waves that are forming the trend, very important for us to understand the component of the trend, the component of the long-term trend are the 5 waves that are forming that trend. Have I made myself clear, or am I repeating myself? Because sometimes traders say, oh, you say it, Joe, you say it. But the reason why sometimes I say it many times is for those traders that I may say, George, it doesn't make any sense to me, it doesn't make any sense to me, it doesn't make any sense to me. While some people are too bright, you say once, they say, George, I get it. Don't say it again, please, just say it again. Now, the short-term trend will form the medium-term trend. So, for a day trader, the daily chart will be the long-term trend. The hourly time frame will be the medium-term trend. But those medium-term trend are the 5 waves of the trend. Now, so you see now we say 1, 2, 3, 4, 5. Those are the medium-term trend of the trend. Yes or no? Now, you see the price went up from here to here. The short-term trend will form this move up, you see. But we know also that that section for Elliott wave trader, which is the first wave, can also be subdivided into what? 5 mono wave. So you have again on a medium-term trend, okay, a trend that is formed on a medium trend is just forming a component of the medium-term trend. Am I making sense? Let me know in the comment section. If this is another blah, 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 give me the thumbs down and let me know, George, oh, today's too bad. Okay? So you see this section here. So this is a component, or this is a medium term. So you see 1, 2, 3, 4, 5. But you see, we can do this. So let me do it now so you can see clearly how the short-term trend will form. Okay, so this section here can also be subdivided into 5 because we are Elliott wave traders. We have an edge and we know how those waves will be formed. Should I charge you for this information? I think I should, but because we are friends, okay, I will not charge you. At least to make you laugh a bit, okay? When it comes to money, people get upset, all right? Don't get upset. So now here we are. Are they overlapping? Because they shouldn't overlap because this is about Elliott wave. So 1, 2, 3, 4, 5. So those 1, 2, 3, 4, 5, okay, are short-term trend that are forming the medium-term trend in this section here. Let's put a bit of color into it so that everybody is happy. Now, this is one of my favorite subjects when it comes to Elliott wave. By the way, I do not share any confidential material on YouTube at all. This is the golden rule. All right? Never share any confidential material on YouTube. Never. Now, the next thing is that every information that I'm sharing here is from my own observation over the year, looking at the market, and my obsession to understand things. So somebody may say, Joe, where do you get this information from? Well, it's just somebody who wants to understand things and going around trying to figure out what's going on in this messy market. That's all. Hope you like my drawings. Okay. So you see here. So 1, 2, 3, 4, 5. Those are the short-term trends. So from here to here, forming, okay, the medium-term trend. So the components of the medium-term trend, okay, are the short-term trends. So this is a short-term trend. This red line, this is a short-term trend. A bit of correction, a short-term trend, a bit of correction, a short-term trend. Now all those 5 components now form a medium-term trend of a bigger, okay, from the medium-term trend of the long-term trend. Are we getting confused? We are talking about short-term trend form the medium-term trend. Medium-term trend form the long-term trend. Now, for us as an Elliott wave trader, when we hear the word trend, the first thing that is coming to our mind straight away, multi-wave. 1, 2, 3, 4, 5, wave no overlapping, no violating the Elliott wave principle. This is how the Elliott wave trader think. Trend, boom, they think of 5 waves. All right, so you see how the short term will form the medium and the medium will form the long term. But you have to understand now that I told you, you know it now, that whenever you talk about, you can now go around, somebody say to you, what is the medium term trend? So why you should ask that person, see, what is your long term trend? If they don't know, then you ask them, are you a day trader? So you may say, all right, if you are a day trader, a typical day trader, the long-term trend is the daily chart. Then you can go now and explain to that person what is the medium-term trend for a day trader, what is the short-term trend for a day trader, and how they form, and what is the correlation, and the thing that we are discussing here. All right? So somebody else may say to you, George, okay, what is the short-term trend today? Then I may say, all right, what is your medium-term trend? Are you a day trader? Are you a swing trader? Are you position trader? Are you an investor? So an investor, for instance, may hold position for 5 years or 4 years, okay, because of the American election. Investor will hold position for 4 years. So now Mr. Trump is in office, investor will look around and starts to see where the market is heading and take position accordingly because of the new policy that are in place in the United States. Politicians are also market participants. You may not know the Federal Reserve can change the dynamics of the financial market. All right. Same thing people do all over the world. Best investors pay attention to the current policy that are in place. All right. So, and then they see which sector will benefit from those policies. You may now understand why investors always try to be friends to the politician to get a bit of idea. So they may invite the politician to their house for a tea or for coffee, having normal conversation, but the investors are making a lot of deductions from those conversations. You may not know. All right. Okay. Now let's continue with our discussion. How long we have been talking now? We don't want it to keep it too long, but this is an essential tutorial. So maybe 25 minutes or 30 minutes for this video. All right. So we say a trend derived from a cycle, short-term, medium, and long-term trend are relative to each market participant. Short-term trend form medium-term trend, medium-term trend form long-term trend. Now, there is one more thing we need to add here is that the long-term trends are the bigger component of a cycle. So what I'm highlighting, okay, those key levels, I have here 6 key levels that I have here. Okay, that you need to understand. The long-term trend are the biggest component of a cycle. How? We know, with Elliott wave. So you say bullish cycle, okay? For an Elliott wave trader, a bullish cycle is something like this. Price goes up in a trending phase, subdivided into 5 waves, followed by a correction. Can be a complex correction lasting for many years, but until that correction is finished and a new cycle has begun, that Elliott wave cycle is not yet finished. So you have to understand that for each, so when we are talking about the biggest component of a cycle, we are talking about how the price move up or down, right? So it's not how long it takes for it to form. So the long-term trend is the biggest component of a cycle, all right? So for instance, a position trader, all right? A position trader that is considering, okay, the yearly chart as the long-term trend will be looking for Elliott wave cycle on the yearly chart. So for that position trader, the components of that trend, talking about the medium-term trend, okay, will be the monthly chart, all right? And the short-term trend for a position trader is the daily chart. Now, the biggest component on the daily charts, on the biggest component of the yearly chart cycle, okay, will be the trending phase on the yearly chart, 1, 2, 3, 4, 5. So for each cycle, all right, the biggest part, we're talking about where the price did move up or down, okay, to the highest point or to the lowest point, is the trending phase. All right. Now, a cycle is also relative to each, okay, financial instrument. Now you have to understand. Now I need to say this again. Allow me to say this. There is a big difference. Maybe you did not get it. All right. That's why sometimes I repeat myself. Okay. At the beginning of this tutorial, all right, I said that short-term, medium, long-term trends are relative to each market participant. We get it, okay? Now, I'm saying something completely different now, is that a cycle is also relative to each financial instrument, not to the market participant. We know that medium, short-term, long-term trends are relative to each market participant. We clarified that already. Daily chart, day trader, swing trader, position trader, investor, right? But a cycle is relative to the financial instrument. Feel free to disagree because those are my observations. So if you think that, George, it doesn't make any sense, put in the comment section and let the conversation continue. I may record another video and say, okay, George, okay, I've been wrong, or maybe this person, okay? Put in the comment section. Because if you look at, for instance, Apple stock, all right, there are cycles, all right? You may see another stock, some stock, you will see they have a short, some stock, they are always consolidating, all right? They have a range. Professional traders know that. All they do, people think that they are trading, they just go up to one point and they come down. That's what they do over the year. And those specialists, okay, stock traders, financial market traders, know the pattern for that financial instrument. So each financial instrument has its own cycle. All right? Each financial instrument has its own cycle. Now we want to understand the difference between a cycle now of the financial instrument and, all right, the Elliott wave cycle. So you may see a stock may go around. So what is a cycle? In fact, a cycle is when something goes out, start going out from somewhere, so point A. This is what I explained to traders. People asking, what is a cycle? Is this? When something has something like this, go from the starting point and returns to the starting point, that's a cycle. You remember on the 31st of December, we celebrate the beginning of a new year because the earth returned to the first place. So a new year, this is one cycle. But a day is a cycle also. All right? 24 hours from midnight, blah, blah, blah. But for some people, the day is not from midnight to midnight. For some people, it's when it's dark to when it's dark again. All right? So this is what we are talking about. So it become but if you think of it, a cycle is when something starts. So you start from here and you return to that place. That's a cycle. All right? It's a cycle. But for us that are using Elliott wave, a cycle is a trending phase plus the correction. But the cycle is also relative to the financial instrument. Why do you need to know that? All right, because you are an Elliott wave trader, you think that everybody else look at a cycle like you do. No, not all financial market traders see that way. You are an Elliott wave trader, you are applying the Elliott wave theory that stated that the Elliott wave cycle is formed of the trending phase and the correction. But each financial instrument has its own cycle. That's why sometimes you see that correction can become complex when the financial instrument is trying to complete its own cycle. Some stock may have 10-year cycle, some stock may have 5-year cycle, some stock may have 3-year cycle. But now it's down to you to look at the financial instrument and find out what is the cycle for this particular financial instrument. Are we getting confused? Is it getting too much? All right. So those are the few things we need to understand first. So, but in this tutorial, the takeaway, all right, is that the short-term trend from the medium-term trend from the long-term trend. Okay, very, very important. Now, the medium-term trend is the 5 waves that are forming the long-term trend. For us, an Elliott wave trader, we need to understand that. So once we understand that the medium-term trend is always forming the long-term trend, and the medium-term trend are the 5 waves that of the trending phase. Very important, because when an Elliott wave trader or practitioner hear the word trend is 5 wave, multi-wave, those are the things that are coming to our mind straight away. Right? So you may say to me, okay, George, I get a theory a bit, you annoy me now, George. How do I use that in trading? You're asking a difficult and very expensive question, my friend. All right. So, because I said to you that I will be recording more tutorial relating to this matter, I don't want this video to be too long, but to answer that question, okay, which is not a bad question, the best time to buy in a bullish trend is when the medium trend is aligning with the long-term trend. I will say it again. The best time, so we as an Elliott wave trader, we want to forecast the market and we want to time the market. Those are the ability of smart Elliott wave trading. Timing the market is very important. So we want to buy in a bullish trend when the medium trend is starting to align with the long-term trend. So here, this is where we can look for an opportunity to buy when the medium trend. So we know that the medium-term trend, okay, is formed of 5 waves. Okay, so now you see here is turning from bearish to bullish at this point here. That's where we want to buy when the medium-term trend starting to align with the long-term trend. That's the time to buy, because we know that. So it's getting a bit long because every time I say something, I need to explain it more. Okay, now, and you want to know where you are in the cycle, because you want to know what this is so important to know the cycle that's been formed, so you may know where are we. Do we still have room to buy? Should we continue to buy, or should we stop to buy? All right? By knowing the cycle, we can make those decisions. But when we know that the cycle is not finished yet, and the trend, most importantly, the long-term trend is not finished yet, we can buy when the medium-term trend is aligning with, okay, the long-term trend. So you see, there was a disagreement between the divergence between the medium-term trend and the long-term trend. The long-term trend is bullish, going up. But you can see that the medium trend was going down, okay, here, this section here. But here, at this point here, it starts turning, rejoining, okay, the trend again. Now the question is the trend finished? No, it's not finished yet. Do you know the cycle? Yes, we know the cycle. So we can buy here. But if the trend is finished, we can apply that strategy at all. So it's so important for us to know the cycle and where we are and what's going on. Here again, you can see that the medium-term trend, when the medium trend diverges from the long-term trend, and now it starts aligning with the long-term trend, we can time the market carefully. This is a technical analysis. So for an Elliott wave trader, we can say, yes, I get a message. It makes sense. You answer the question correctly. But now, there's one more thing. Do not just buy because of what I said today. You will also check the fundamental. Perform Google seed test, okay? All right? And pay attention to, okay, the sector, all right, and the market, the S&P 500. So you can use the trading triangle, all right, to make a very smart decision without too much, okay, a sweat. All right. So I think I said what I need to say today. All right. So the takeaway, very important. A trend derived from a cycle, short-term, medium, long-term trend are relative to each market participant. Short-term trend form medium-term trends, medium-term trend form long-term trend, long-term trend and long-term trend are the biggest component of a cycle. A cycle is also relative to each financial instrument. The best time to buy is when the medium-term trend is aligning with the long-term trend. So at this point in time, you can see that when it's going down like this, the short-term trend will be forming. So we know this is a correction. So we'll say 1, 2, 3 down to this point. Now you will see at this point in time where we are, when you are ready to buy, because you know that the trend is not finished, you notice that suddenly you know that, okay, you understand the pattern of the correction. Now you will see that the short-term trend will be the first one aligning with the long-term trend. Yes or no? And then you wait patiently for the medium-term trend to rejoin the long-term trend. You have a bullish trading setup. Now, when the medium-term trend rejoins the long-term trend, you see, remember? So here, when you are here, you will say, break above, retest, turn around. So price going down in a declining channel, okay? And here you say, break above, retest. That's your bullish trading setup. One more thing, you will apply a top-down trading method to trade it like a pro. This is the end of this tutorial. I would like to thank you very much, traders that were saying to me, George, please, 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 all right? So there is a particular trader that was asking me all the time on Facebook, on YouTube. Thank you very much. I hope, okay, you will find this video useful. Understand that this is just the first part of the series of video that I will be posting. I'm not saying straight away because I don't want to, okay, overwhelm other traders that may not be interested in this subject. So we will be talking about it gently, and I will be coming back to this subject about the short-term, medium, and long-term trend. For an Elliott wave trader, okay, when we hear the word trend, we are talking about multi-wave, okay, 5 Elliott wave that are not violating the Elliott wave principle. All right. If you have any question or suggestion, okay, this is your time to put in the comment section, and in due course, okay, I will be busy recording another video to answer your specific question. To help me also, if you like this video, what I want you to do is to share it, okay, on Twitter, on Facebook, so other traders also may learn from it. Why? Because when you have an efficient market, okay, you are more likely, okay, to have profitable trade. So you do not want other traders to be doing all kind of crazy things. You want them also to know. That's why myself, I'm sharing this information for free on YouTube, okay? So happy trading to you all, and speak to you soon. We are the TSTW24 traders talking about Elliott wave trader gives a clear explanation of the short, medium, and long-term trend. Speak to you soon.